State Bank of India (SBI's) annual deposit schemes allows you to receive monthly income like a salary. With the right planning, you can now get another income apart from your salary on a regular basis. So let's see in detail how much monthly income you can generate with this SBI Annuity Deposit Scheme. We will also look at another option, which is the SBI Mutual Fund, through which you can create additional monthly income. Balanced Advantage Fund (SWP). We will look at both the schemes in detail in this video. If you need information on mutual funds, please subscribe to this channel. If you would like to invest in mutual funds based on your specific risk profile, financial goals, and duration of such goals, you can register here. You can also drop a comment in the comment section below if you need more information. The first is SBI Annual Deposit Scheme. In this scheme, you have to deposit a lump sum amount in the bank one time. The bank will then return this amount to you like an EMI on a monthly basis. The monthly amount they pay will comprise two parts. One, your principal deposited with the bank, and another part is the interest that you have earned. The interest is compounded quarterly and is discounted on the monthly payment made to you. The interest is applied on the reducing part of the principal outstanding. You can receive the monthly payment called annuity installment for a period of 3 years, 5 years, 7 years or 10 years. The amount paid will vary based on the tenure you choose. You can walk into any SBI branch to invest in the scheme. The minimum amount you can deposit is ₹1,000 and maximum there is no limit. To plan for our absence, we can nominate our next of kin to receive this amount. So the investor deposits the lump sum and starts receiving monthly payment, which will be nominated to a spouse or kids if an unfortunate event happens. They will receive the principal and interest on our behalf. So how much monthly payment will we receive? Well, the payment depends on the interest rate at the time of depositing. This would keep changing, but you can consider this as a rough guideline. Please note, senior citizens will get a substantial better benefit. Now let us see the cash flow with an example. Let us say you deposit ₹1 lakh in SBI Annuity Deposit Scheme for a 5-year tenure. The bank would offer an interest rate of 6.5% approximately. The bank would calculate the compound interest on this and pay you an EMI. EMI will include part of your principal deposit of ₹1 lakh and the interest calculated on the decreasing principal. On a 1 lakh deposit, you would earn an interest of about 17,400 for 5 years, an income of about 1,957 rupees per month. The next scheme is SBI Balanced Advantage Fund (SWP) or Systematic Withdrawal Plan. This is not a bank deposit, but this is a mutual fund scheme and will be subject to the risk of equity markets volatility. These schemes' returns are not guaranteed. Further, this is not a bank deposit, but a mutual fund scheme. Your earnings will be linked to the performance of the equity market, which goes through regular ups and downs. Hence, an investor must consider his risk nature and life cycle situation before investing here. SWP or Systematic Withdrawal Plan means withdrawing a predetermined amount for a predetermined period from your investment. This amount received is automatically transferred to your bank account on a monthly or a quarterly basis. This fund has returned about 13.5% since its inception in August 2021. Note, these are historic returns or past returns and do not guarantee how these funds can generate returns in the future. But if you assume this fund can generate say 10% and you decide to withdraw 6% yearly, you take it on a monthly basis, then you will withdraw about 500 rupees monthly on a 1 lakh initial investment. You will be able to grow this 1 lakh initial principal over time as you're withdrawing lesser than what the fund grows at. So in spite of withdrawing 500 rupees monthly, the 1 lakh principal stays intact and also continues to grow. Please remember, this is a mutual fund and the returns are not guaranteed, and there can be years when the returns are also negative. If you need to know more about this concept, I will link some videos at the end of this video and in the comment section. So if you withdraw 500 rupees in this example on a monthly basis, you have withdrawn 30,000 rupees over a 5-year period, and your principal would have grown to approximately 1,15,000. So every few years, you can withdraw a bonus, which is the growth amount over and above 1 lakh. I hope you liked the content of this video. Please do consider sharing it with your friends, liking this video, and subscribing to this channel.